so much for joining us in this session. It's such an honor to have you with us.
Thank you for your invitation.
Just to start off, maybe you can introduce a little bit about Banking Circle, what you guys do, and what's your role at Banking Circle?
Banking Circle is a bank based in Europe. We focus on payments. We support about 500 payment institutions, and also we act as correspondent banks for several banks as well. And we are also a bank in Australia. In Europe, we are the first bank that actually launched a MiCA-compliant stablecoin. That is what we think is the future of payments, where tokenized money would play an important part.
What about yourself? I mean, what's your role at Banking Circle?
So I'm head of Web3, and I look after the Web3 initiative. So that includes the stablecoins that I mentioned, and we also do other things, for example, tokenized deposit. So we also launched a Euro tokenized deposit for Ant Group.
Interesting. Now you just mentioned both stablecoin and tokenized deposit. So for me, it's like a Banking Circle is providing the rails, and the investors or allocators are just ready to hop on the train. All of a sudden, whether it's stable coins or tokenized deposits just popping up as a alternative to options. Why these are relevant to today's investors?
I think if you think of what's going to happen in the future, a lot of people think that you're going to see tokenization of real world assets happening a lot more. As it is now, you already see things like tokenized equities. Kraken has launched a tokenized equities, and a lot of other firms are looking at that as well. So you will see more and more capital market products being put in the tokenized form. So the difference between tokenized asset versus traditional asset is a lot of tokenized asset is actually transacted without an intermediary. So you take, for example, when you go and buy an equity, you do not really worry that the seller not delivering the shares or the buyer not paying you, right? But what happens is the reason you can have that trust is you have a centralized party, you have brokers in between, and you also have the a clearinghouse. But what happens in the tokenized asset, a lot of these transactions happen in a blockchain where it's disintermediated. And in order to make sure that the transaction is settled without any issue, where the buyer gets the goods and the seller actually gets paid, you need the transaction to happen delivery versus payment, which is known as an atomic settlement. In order to get a tokenized asset to be done in such a format, you need tokenized money to pay for it. Otherwise, what will happen then is that you will have a mismatch between the timing of the payments and the delivery of the tokenized asset.
Thank you for elaborating on that. You mentioned, some of the providers or industry players already getting into the space. Do you see these, whether tokenized deposits or stable coins or other, crypto-related assets, gonna replace the traditional assets, or is it complementary to what we already have in the traditional financial world?
I think at the moment, if you look at the overall crypto asset space or tokenized space, we are just in a few trillions of US dollar worth. Versus if you look at the whole market cap of gold, that's more than 20 trillion. You look at equities, that's like 120 trillion. And fixed income is also another about 120 trillion or thereabouts. So tokenized assets is still very relatively small relative to a lot of this traditional asset. So you're going to see it's going to be quite a long process. It's going to be incremental, but more and more you will see that assets will be tokenized, and eventually you could see that maybe tokenized asset might become the majority means of transaction in the future. But it will probably take some time to achieve that.
So right now, at least for the time being, foreseeable future is complementary to the traditional assets.
Yeah, that's right.
But if this complementarity holds, do you actually see, at the moment, the corporates and institutions are increasing their volume in terms of the allocation?
Usually when we talk about tokenized equity, one of the pushback you actually hear is, well, it doesn't change the underlying. Why then there's a need to tokenize it? And a tokenized Tesla or tokenized NVIDIA, it's the same as a Tesla and NVIDIA, and in fact, I can buy it directly. So why do I need it in tokenized form? So then what happens is that when you start explaining to them, there are actually other use cases. For example, if you tokenize an asset, you can use it as collateral in DeFi, in decentralized finance world. But if I buy my Tesla, I can't pledge it, for example, with Hyperliquid or other DEXs and stuff like that. So there are actually use cases when you have a tokenized asset that's being recognized as collateral in decentralized finance, you are actually able to do a lot more with your asset. So if that use case grows, you're going to see a lot of other benefits of tokenization besides just fractionalization.
If we're looking forward, where we will be in the next 2 to 3 years?
Well, I think that you will see a growth in tokenized asset, in tokenized real world asset, but it's going to take some time. I mean, the things that's actually hindering it would probably be, one is you need a clear regulation on what happens when you tokenize an asset, how you distribute it and stuff like that. There's some clarity that needs to be done. And then the other things that also needs to be done is that there's a lot of education that needs to be brought forth. Because generally, there are a lot of people that have misconception of what are these assets. So like recently, I did a panel on this tokenized asset, and I just realized that in the general audience, there's a lot of misunderstanding about the different types of category. For example, what is considered a security token, what is a tokenized equity, or what are stock tokens. They are all very, very different assets. And it takes some time for them to actually understand this. For example, security tokens. Largely, they are actually tokenized private equity or tokenize some form of a capital markets product that's actually not yet listed. A tokenized equity, on the other hand, is actually tokenizing something that's already been IPO'd, already listed in the main exchange. For example, you tokenize NVIDIA or you tokenize Tesla. And then you have stock tokens. So like, for example, you have stock tokens on companies like OpenAI, which actually is not listed, right? So technically, those are actually not a tokenization of an equity. You are tokenizing a promise. It acts more like a CFD. So a lot of all these instruments are actually very different. So there is a time for people to understand about all these things before they can actually utilize it in the appropriate manner.
You mentioned just now that Banking Circle is the first one that issued a MiCA compliant stablecoin in Europe. Tell us about this stablecoin and how does that shape the stablecoin issuer landscape in Europe?
We are the first bank that issued. There were other EMIs that did issuance, right? We are the first bank that did issuance. MiCA gives a very clear regulation of what stablecoin should be. So under MiCA, you have different types of stablecoins. For example, what is known as an asset reference token or what is known as an e-money token. So what we have issued is actually an e-money token, which is a token that's backed one-for-one by a single currency, which in our case is euro. And this token is actually set up similar to how e-money should be, right? It is fully backed by fiat currency. You are only allowed to actually invest in only assets that is allowed under EMD. But in fact, we go one step further. Our reserve that we use to actually hold this is actually all done in a bankruptcy remote structure. So in this case, you are actually giving an additional layer of protection, right? So regardless of whatever happens, the reserve remains safe, and we do not lend out these reserves, and the reserves are all actually swept into the central bank. So by doing this, we ensure the highest possible integrity in keeping the reserves.
Token 2049 is coming to town, right? Next week. You're super busy, packed with different, panel discussion, moderation. What are you looking forward to in this event? What do you expect?
I think all these events are actually very good to understand about what are the future trends, what are the global community looking at, where are the next trend going. What are the new products in the market? So I'm excited to see what is in store this year.
these days it's hard to say whether you're Web3 or TradFi. It's all going both ways, right? The line is very blurry.
Yeah.
So there's a lot of exciting things I'm looking forward to.
And I think that there's also a big convergence now you're seeing between TradFi and cryptos, right? So you see a lot of traditional brokers like yourself moving into the crypto space. And there are a lot of crypto space people that are moving into the space, right?
Exactly.
So you will see a lot of crypto providers that are also doing certain structured products and derivative products, and that is actually very similar to the wealth management products from TradFi.
It's very interesting to see how the industry continue to evolve. And as a regulated, financial service provider, definitely we should work together to make the ecosystem more lively and, to provide better education to our community members. Thank you very much, Daniel, for this lively discussion and dialogue. Thank you so much for, sharing all the insights in Web3 space with us.
Thank you very much.